Hello and welcome to the Genuine Learning Blog. My name is Melissa Glasso, and today we're going to talk about our IESBA tax planning revision. It seems like we're on a little bit of an international streak over the last couple of vlogs, but they have been putting out a lot more than what we've seen here in the United States. We do think that there'll be some big ones forthcoming, but in the meantime, we wanted to hit on some of the ideas that could potentially impact the US, because we do know that there is a strategic goal of, to the extent possible, aligning and converging with the IESBA process for PEAK and the AICPA. So we wanted to take a look at, well, for tax people, what are some of the things they're looking at for tax planning? So this was issued on April 14th, which is kind of funny given it's a tax concept. But again, that's our US deadline, April 15th. But this was issued on April 14th, and it is a movement towards a more principles-based approach. Currently, it's a very mechanical, very legalistic approach around looking at the tax world. And so they're going to switch it over to a more principles-based approach. And again, it's around this more scrutiny that we're seeing around tax avoidance strategies. And so there are two sections in here. Section 280, which is tax planning activities, which are for professional accountants in business. So similar to how the AICPA code differentiates between members in public practice and members in business and industry, we'll see the same thing here for IESBA. So this one is for those who would be in business and industry, and it tells us that tax planning activities might create a self-interest, self-review, advocacy, or intimidation threat. And again, the threats and safeguards are a little bit different between the international standards and the US standards. And so as we go through this, there are threats to independence when we are or threats to what they consider to be fundamental principles. Again, you don't have to be independent when you are a professional accountant in business. Now, this is not tax evasion, because tax evasion is illegal, but tax planning, which is a lot around tax mitigation, trying to reduce somebody's taxable income. And so as we think about these, tax planning activities are advisory activities designed to help, in this scenario, an employing organization, because it's for members who are in business and industry. So how can the employing organization plan or structure in a tax efficient manner? Now, this is not the compliance. This is not completing tax forms or filing tax requirements. This is the advisory side of the house. And so a professional accountant shall recommend or otherwise advise on a tax planning arrangement for an employing organization only if they believe that there is a credible basis in law and regulation for the arrangement, right? So that you're not pushing boundaries, but there's a credible basis for it. And obviously this is a matter of professional judgment. So you have to consider reputational, commercial, and wider economic consequences that could arise with respect to this. Now, you need to explain to management and, if necessary, those charged with governance, the basis on your recommendation when you're going through this. Well, no surprise, Section 380 is tax planning services for public practice. And again, we see that self-interest, self-review, advocacy, and intimidation threat here. Again, not addressing tax evasion, but these are advisory services for a client. And that could be an individual trying to help someone reduce their individual taxes, or it could be an entity, an S Corp, an LLC, in planning and structuring its affairs in a tax efficient manner. And there's lots of CPA firms who, in addition to sort of their compliance considerations, provide these sort of advisory services. And so when there are laws and regulations, including those that might be anti-avoidance rule, that either limit or prohibit certain tax planning arrangements, obviously we need to understand those laws and regulations and make sure that we are advising compliance to comply with them, right? So as an advisor. So again, only recommend those arrangements that we believe there is a credible basis in law and regulation, exercising that professional judgment and explaining to the client, right, what is the reason and the rationale behind it. Now, if a client engages in a professional accountant to advise on tax planning or arrangements developed by a third party, right? So this was already existing. This is just an update. The accountant is going to inform the client of any professional or business relationships they have with that third party provider, and then apply the same provisions as we go through here. So if we're providing the tax planning, obviously that's one concept. But if they're asking us, hey, I heard about this, right? We need to first disclose any kind of relationship we have with that third party. And then we would go back to, okay, is it in compliance with the law? Is this going to be legal as we go through it? They also made minor edits to Section 321 for second opinions as we go through. So we don't know how the U.S. will interpret this or what they're going to take on, but we do know that there is a strategic direction of trying to look at any IESBA changes and consider them for the U.S. So it'd be interesting to see, how do you guys feel about this sort of guidance in the United States? All right, so that's a wrap on this week's blog, and I hope to see you on a future blog. Have a great day, guys. Bye-bye.